Hello, and thank you for joining our webcast today. Our topic is tax, 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 what you should know as a scouting volunteer before April 15th, 2017 for your 2016 tax. I would like to start off by introducing everyone to our sponsor. It is my pleasure to introduce Sam Kelsall. He is the current Vice Chairman of Finance with the Grand Canyon Council, Boy Scouts of America. And he's the guy who did all of the legwork and the driving force in getting this presentation sent out to the Boy Scouts and available taxes. Our speaker is a CPA located in Phoenix, Arizona. He has a master's degree in taxation from New York University. He and his entire firm has a major mission to help clients keep more of what they are working for and living for. Said differently, this means saving taxes. He asks you not to hold this against him, but he was in a previous life an IRS agent. He has published tax articles and a book called Hard-Hitting Tax Strategies for Corporations. Many CPAs locally and nationally know our speaker. He has made many presentations to them. So, without further ado, let's welcome Chuck Thornton.
Well, good morning. And you've probably heard the joke about an accountant. You ask them, what's 2 plus 2? And they say, I have to disclaim everything before I answer that question. So here's our disclaimers. Let's do this right off the bat. Presentations for informational purposes only. I don't represent you. Sam doesn't represent you in your tax situation. So always seek the advice of your tax advisor before you implement any of these ideas. Okay, we're going to talk about quite a few things here. First of all, we're going to talk about what's a charitable contribution, how does it apply to Boy Scouts. A lot of what I'm going to talk about could apply to any other organization, but I'm going to zero it into the Boy Scouts. Talk about the documentation that you need to have. It's not too late for your 2016 return still, and how you can get this Arizona tax credit, excuse me, which is what Sam has really been promoting. So what's a charitable contribution? It's a donation to a qualified organization. It's voluntary. There's no expectation to get anything back, so it's not like I'm going to make a donation to a church as an example, but they're going to give me free advertising space. I'm expecting to get something back. So therefore, there's no expectation. The IRS says it's detached and disinterested generosity. That's a fancy term for basically there's no catches. There is no deductions for contributions to individuals. I'm going to give you an example here in a moment. In fact, let me give it to you right now. If there's a person in your troop that maybe is going to Philmont, I had that situation one time, single mom that really didn't have the funds for it. I thought, how could we help out? So my company made a donation to the troop, got the appropriate receipts, and we kind of had an understanding it was going to go to this particular scout, but I didn't control that contribution once I made it. That was very clear, but indeed they did give the money to the person for that. So I did not make a contribution that was earmarked for an individual. I gave to the organization. Some strategies that you can use if you have, especially companies that maybe some of the adult leaders own. This might be a way to get some fundraising for needy situations within your troop. For the remainder of this presentation, I'm going to assume that your unit is what's called a tax qualified organization. However, that assumption is not always true. It's a whole nother presentation. Always check with your advisor to make sure you are a qualified organization. So make sure you check with your tax advisor. So what can you deduct? Well, some logical things, money or property given to a unit. If you give property to a unit, you can deduct the fair market value at the time of contributions. I've been involved with several troops, and I'm amazed at how some troops just don't seem to have equipment. For new people coming in, they need packs, they need uniforms, and other troops have a whole trailer full of packs and tents and things that departing, aging out scouts and their parents were glad to do some house cleaning and leave it with the troop, with the result that one particular troop had more packs and tents they could shake a stick at, yet other troops don't have anything at all. So don't forget, those donations of those old packs, those old tents, scouting equipment, old uniforms to the troop can be deductible to the extent of the fair market value at the time of the contribution. So contributions from which you benefit. If you receive a benefit as making the contribution, you can deduct only the amount of the contribution that's more than the value of the benefit you receive. Now, I'm building up to some strategies here, but you need to understand the basics. So bear with me on a little bit of this boring conversation, if I could use that. So if you are making a contribution and you get something back, you can only deduct the difference. And as you can probably expect, someone needs to make a statement as to whether you got something back of value or not. Payments for your son's uniform, dues, camp supplies that you go buy for your son would not be deductible. But any of you scout leaders who've gone down to the scout shop and bought a full uniform, I tell you one thing, they're a lot more expensive now than they were when I started scouting a long time ago. You can part with a decent chunk of change, so the uniforms and the things that you're paying for, if you're going down to summer camp to help out supervise, all those things as a volunteer, you're a candidate for. So when you incur them as a volunteer, out-of-pocket expenses and giving services. Okay, I'm still building here. If you're going to donate your services, can you get a deduction for it? If I donate my services as a treasurer, if Sam donates his service as a lawyer, someone in your troop maybe as a doctor, and maybe he agrees to do the physicals for your kids for summer camp for free. Those amounts, although goodwill, they're not deductible by them. But what about the expenses that are incurred in conjunction with that are not reimbursed? Directly connected with those services, they're expenses you had only because of the service you did, and they're not personal living or family expenses. Well, they're candidates to be deducted, and they're subject to the travel and over $250 rules I'm going to be explaining later. So here's some out-of-pocket expenses, simple ones so far. Adult dues. Car expenses. Some troops reimburse adults for driving cars to camping events, some don't. I usually don't get a reimbursement. I just simply do it as part of my contribution to the scouting for my time and my expenses. For you people maybe going to Philmont, taking the wilderness medical course that you have to take, well, wilderness first aid, that can cost you $190. CPR can cost you $25. So don't forget, adding all that up, those can be expenses that would be deductible because they're out of pocket incidental to the services that you're doing. And then you had travel and outings. Boy, we've got some further rules on that. So various unreimbursed expenses. Sometimes you have a variety of expenses throughout the year. You have gas for your car, maybe go buy the uniforms, you have a variety of things. And the question of it is the troop going to give you a receipt that says, we acknowledge that you bought your uniform, we know you drive your car, the uniform cost, that would be an accounting nightmare to do. So there's another requirement that says if you have more than $250 worth of these expenses, you need to have a qualified acknowledgement. Now, by the way, I've said you should talk with your tax advisor. Some tax advisors will tell you that it's actually $250 per item, and I would say that's probably correct. However, why not just get the documentation right up front at the beginning or at the end of the year, regardless of what the dollar amount is, and then it's up to you to handle the $250. So my suggestion is any volunteer just gets a receipt that we're going to talk about. The unit doesn't have to see the receipts. That's why you don't want to have the wording on these documents that says the uniforms cost such and such. But what the unit's doing is they're going to basically give a receipt that says they are volunteers and they would expect in the course of them volunteering, they would incur some expenses that would be utilized for their volunteer work. There was a case that had to do with a lady who had worked at an animal shelter, and she would take these dogs home, feed them, shelter them, get them to the veterinarian and things like that. And over the course of the year, she had $11,000 worth of these contributions. So she deducted them. The IRS came back and said, but you have no documentation from your nonprofit saying that you had these kind of expenses. It's a statutory requirement. It's not a common sense requirement. So clearly, why would she take strange dogs to the vets and things like that? And she lost all those deductions. It's a statutory requirement that you have receipts that are qualified acknowledgments from your organization, in this case, the Boy Scout troop. Okay, next slide, please. Travel expenses are ones that occurred away from home. I've been talking about Philmont because guess what? I'm going to Philmont this summer, and I've been quite a few times, and so I pretty much know how these rules work. Now, these travel expenses, which could be your cost for going to Philmont, which is pretty pricey, Northern Tier, Sea Base, I've done all those, are pricey for not only the youth, but they're also pricey for the adults that are going to go too. So now you take a look and you say, are those expenses necessary for performing services for the organization? They must not be for significant elements of personal pleasure, vacation, or recreation. However, they're not just disallowed just because you enjoy the trip. So if you're going to go to Philmont and you're going to supervise a bunch of scouts for 2 weeks, you probably like backpacking. You probably wouldn't do this otherwise. And so therefore to say, I like backpacking, I guess I can't take the deduction because there's elements of personal pleasure. They're really talking about people who take cruises and things like that. They're not talking about this, but they're not disallowed just because you enjoy the trip. However, you must be on duty in a genuine and substantial sense throughout the trip. Nominal duties don't count. So if I just went to Philmont to go backpacking and that was it, then I might lose out just on that item alone. But if handled properly, these expenses might be deductible. Consult with your tax advisor. What is substantial purpose? It's a higher standard than just a general contribution. The substantial purpose might include, and this is the ones that I use for myself, is too deep leadership. If you only have two adults being there, there's your answer right there. You have to have too deep leadership, one of which it has youth protection. But perhaps you have 3 adults or 4 adults, which is the limit of what you can have up at Philmont. Well, then maybe one of them is a scoutmaster. One of them is going to be the adult supervisor who has experience, the adult in charge of the crew. Maybe you have a doctor, someone who's very good at medical care who will be the backup person for medical care. Maybe there's someone in your group of adults that's good in orienteering and maybe can work with the scouts on the mapping part. It's not bad when you get your documentation to specify what it is that you did, but it doesn't take long to come up with at least 2 people, 2 deep leadership. It doesn't take a lot to figure out why the other 2 would be there for a substantial purpose. So skills and back up for orientation, training for the youth on the trail could be examples. Okay, I mentioned very briefly this thing called qualified acknowledgement from charity for contributions over 250. This rule probably came about 8-9 years ago, and I'm still surprised at the number of major charities out there who still don't give these proper receipts to people, and we're constantly sending people back to say, get a new receipt, get a new receipt. It came out basically shuffling the burden of the receipt to the taxpayer, no guessing the amounts. You have to have something from the charity if it's over 250. Technically, it's each item over 250. I suggest you just get it for everything. It needs to be a contemporaneous written acknowledgement that meets the tax law standards, and we'll call that a qualified acknowledgement. Must be received by the unit in order to claim a charitable donation deduction. So you go to Philmont, you do all this work and everything. There's only 2 adults. There's no question that the time that you spent could be a charitable contribution, at least in my opinion, but you didn't bother to get this receipt, you lost anyhow. So you need to make sure you get the acknowledgement, statutory requirement, and so an acknowledgement is considered contemporaneous if the taxpayer obtains it on or before the earlier of the date on which the taxpayer files the return for the tax year in which the donation was made. For you folks going to Philmont, I'm just using this as an example. You're probably making staged-in payments for yourself, not for not for the scouts. You probably have already paid $1,000 or $800 this year towards the trip that you're going to take next year. That's for 2016. So if you've already filed your tax return, you just want to make sure that if you didn't take the deduction, technically you might be in a precarious situation. If you did take the deduction, make sure you have the receipt dated by the time you file the return. Or if you haven't filed your return yet, and you got until the 18th, you have time to get one of these receipts that I'm sharing with you. Go to your committee person, get it filled out, and then make sure that you hand it to your tax advisor, get their final say, and you might have a deduction for $800. I would say almost no one does this, to tell you the truth. Every time I bring it up, Everyone says you can really do that. Again, you have to structure it the way that I've been talking about. There's a meaningful reason for you going. So a year has to be done by when the taxpayer files a return in the year that was for the year that donation was made, or the due date, including extensions. I always go on extension, so I have plenty of time to get this receipt for me. And if you're on extension, especially you business owners, you have time for that too. Unit share treasurer must be prepared to produce this qualified acknowledgement. This is where you can help them by, again, you can email to info@rcthornton.com. Make reference to this seminar because we make offers to give all sorts of stuff to people, and we just want to know which one it is. And what it is, it's the amount of cash donated, description of any property or cash that was donated, and an estimate of the value of such said property is not required, but I suggest you put it in there anyhow. The burden is on the person who made the donation. I would caution you that if a pack brand new costs $300 and it's been used pretty good, I would suggest it's not worth $250. So be reasonable in what you think the market value of that would be if you sold that particular item. And the charity needs to state, did you get goods or services in exchange for this? Meaning that if they don't put that statement in there that no goods or services were provided, or no goods or services were provided except for $200, whatever it is, you lose your deduction even if you have the receipt. Statutory requirements. So make sure that you have the statement that there's no goods or services provided by the charity in exchange for the donation. Okay, sample receipts, I've referred to it several times. Cash contributions, there's actually 4 sample ones. They're fill-in, they're Word documents that we have. There's instructions on how to complete them, and when you're done, you take that box that has the instructions and you take it off. They look kind of silly. You might put on the logo for your troop. Most troops that have websites can just copy the file, the picture of that, and put it on there, and you're up and running. What I do personally is I put it all together for me. I give it to the committee person to sign because most people are not geared for this. And it may be that this last minute, maybe you just need to pull it together for yourself and get them to sign it. But it might be a policy to consider at the troop for future stuff. Again, remember, I don't warrant anything here. I just tell you I use them, but I can't warrant that they are going to be sufficient. That's for you with your tax advisor to come to that conclusion. So seek the opinion of your tax advisor. Okay, the other one, this is one Sam's very involved with, Sam, and I'm hoping, Sam, you're listening in. I'm sorry we couldn't get that telephone connection with you, but this is a freebie, and you can still do it. This is where you can basically say to the state of Arizona, you have to be an Arizona resident, instead of giving you $800 worth of taxes, I guess I'd like to just give it to the Grand Canyon Council. Doesn't cost you anything. Just a little bit of a few keystrokes on the keyboard and a good solid credit card or PayPal, and you're there. So it is for local underserved youth that are setting a course for their futures. And what's happened is the Grand Canyon Council has formed an LLC that is run by the Grand Canyon Council. That's an outreach program for serving minorities at risk, special needs, refugees. I don't think they have foster, but economically disadvantaged boys and girls in our state. So this may not be your typical troop environment, but certainly those are areas that people would say, this is something that scouting would be good for. I mean, remember, scouting's been changing lives for over 100 years. So here's how it works, a very simple example. Let's say you made a tax-deductible gift of $100, had nothing to do with this, and let's say you're in a 10% bracket, I just made it easy. You would save $80. It still costs you $720 out of your pocket. You're in a 30% bracket, it's still going to cost you $600 and something out of your pocket. Every charitable contribution you make, always, even after a deduction, costs you something out of your pocket. But with Arizona, you make an $800 contribution, you get an $800 credit, you don't owe anything. You still can deduct this for federal taxes, your $800 contribution, you just can't deduct it for Arizona. So when it's all said and done, some argue that you actually make money. It costs you nothing to do the Arizona contribution, and then you turn around and deduct the $800 against your federal taxes. Let's say you're in the 40% bracket. Well, you're going to save $320. What the heck? You can make that as a further contribution to the Boy Scouts, get a deduction for that, and you could just have a good time with this. The point of it is this really doesn't cost you anything. It's a dollar for dollar tax credit. Okay, remember, it really costs you nothing. Now, some of you are reasonably student enough, and you've done this, the private education charitable contribution tax for the same year. So this is if you made a contribution to a private school for a scholarship program, you've made contributions to public charities or public schools, for instance, for a band program, maybe you've done it for an athletic program. You can take those credits. But you can do this on top of that too. So if you've already made those contributions, you're not precluded. The only thing really that you're precluded from thinking about is you can do so good in all these credits. Maybe you don't owe any Arizona tax. However, you can carry those unused credits forward. So they're independent from each other. Okay, here's the limits. If you're married, $800. If you're unmarried, head of households, married on separate, anyone else, there is a $400 credit they can take. Again, check with your professional to make sure this is the way to go. Now, by the way, it's not in the slides. You have until April 15th to go into the website and make a contribution and have it apply for 2016 if you have not already filed your Arizona tax return. You could file an amended Arizona tax return for 2016 if you want to, or you can just say, oh, what the heck, I'll just go ahead and do the contribution and I'll take it in 2017. So there's a little bit of an option for people who haven't filed yet that's practical and efficient to say, I'll make the contribution by March 15th so I can get the, not March, April 15th so I can get the deduction for 2016. If you make it April 17th, 18th, or 19th, it's a 2017 deduction. You cannot take it back for 2016. I'm really emphasizing this because the federal tax returns this year are actually due April 18th. And you can very easily say, oh, as long as I do this by April 18th, I'm fine. But the statute says 3 months and 15 days. It doesn't say the federal due date, which is normally April 15th. So keep in mind, you need to do this by April 15th. If you want it for 2016, if you don't care, you can take it for 2017. The way you can do this, it's easy, is you go to this website here, which is the Grand Canyon Council. If you really go to just the Grand Canyon Council BSA website, at least as of yesterday, there's a little button there that says donate, so they make it pretty easy for you. And you go to this donate website, and you go midway down, and you will see where it says donate with PayPal or credit card, either one that you want to go. And then there will be immediately the place where you can basically put in your 4,800 or 225, whatever amount that you want to do, and you complete the form. Now, let's take a look at the next slide. There's a little caveat here I have for you. Very important before you finish all this stuff. It took me a little while to find this. At the top of the input section, where you put in your name, there's a thing that says write a note, optional. So you could write, good going, Boy Scouts, geez, Chuck's presentation was fan, Sam was great for putting this together. Or, I'm not suggesting you do any of those, if you would like your district to get credit for this, example, Camelback, open the notes section and enter the district, Camelback District. Why do you care? I mean, they're not going to get a tax credit. Your district directors work pretty hard, and their expectations are from the council that they do a degree of fundraising, that they help these causes out. And since the district may have sponsored this, you might just want to help the district out a little bit and put it in. It doesn't impact your credit at all. If you forget it, you're still going to get the tax credit. But if you'd like it to kind of get the credit to the district executive for that district, just make sure where it says write note optional, open it up and just say, in my example, Camelback District, Four Peaks District, Thunderbird District, whatever you're in. You probably know what district you're in because it's a patch on your uniform, but if you don't know, you can go to the Grand Canyon Council under districts. Okay, we're going to wrap up a quick summary. Don't forget there's on the credits. If you want this stuff when you return for 2016, do it by April 15th, not the 18th. Go to the website, use your credit card. So easy to do this. I can't imagine anything easier other than they had an automatic withdrawal of your bank account. Mine made it easier. They'll be sending you the receipt when you're done also. For your other volunteer activities, it's getting a little late, Some people who are in extension still have a chance to get those receipts, but there's some creative things in there that you could do for getting donations, equipment from departing scouts, and ensuring people get deductions. You people who go to the high adventure, I know these things cost a bundle, especially if you're going with your scout. There are ways that you can deduct that, but you need to kind of look at the rules and get those receipts that we're talking about. So I'm going to thank Sam for sponsoring this, and I'm going to pass it back over to Kit.
Great. Thank you so much, Chuck, for your presentation today, and we thank everyone who joined us on the webinar. If you need receipts or those acknowledgement forms, please email me at info@rcthornton.com. And I want to give another big thank you to our sponsor, Sam Kelsall. He was the driving force in getting this presentation out to you guys. He's the current vice chairman of finance for Grand Canyon Council. So thanks again, Sam, and thank you, everyone. Have a great day.